Hello, everyone. This is Drew from Best of Us Investors working with Mark on the Platinum Trading Platform. And as I always say, Mark has been investing for over 40 years now and has worked as the director of operation on an online firm for about 10 years. Now, he will be doing overviews on what we saw in the market and the charts from the previous week regarding swing trades, and also share some of the stocks that he has been trading and he's keeping an eye on for the upcoming week. Now, for a watch list of stocks that are set up for great swing trades with uptrend potentials based on more than 7 indicators every day, along with educational videos on how to read charts, come join our Platinum group and let's get through this tough market together, seeking for great swing trade opportunities and even for great potential entry points for long-term investments as well. So make sure you check the link in the description below for the Platinum membership. And I just wanted to remind you that this video is not made for financial advice, but for educational purposes only. So Mark, how was the market last week? It was a pretty interesting and I would say crazy week. Was there any insights or swing trades that you wanted to share?
So this is pretty much where we've been with the S&P, and you can see, right, we were just doing a sideways trading basically towards the end of the year and the beginning of January. And then about the 6th of January, we broke out of this box. You can see we've just been trending up and up, and we've crossed over the 200-day simple moving average, and it came back down. And then the next obstacle was the long-term bearish trend line right here. We broke out of that. The next obstacle was 4,100 on the S&P. You can see we bounced off of it here on the 27th of January, and then we broke ahead with the Powell Fed meeting. And then today we come back and we're trying to fill this little gap a little bit. So the trend is definitely up in the SPX. We go over and look at the index, which is the NASDAQ, and we see the same thing. There's our long-term trend line right here. Here's our 200-day simple moving average. We're above the 9. You can see we were in that same kind of sideways pattern at the end of the year. And since that time, it's just been taken off. Again, there's a huge gap right here that'll probably be filled at some point. But when you're above the 200-day simple moving average, if you go and look at the indexes, you'll probably see the same chart on the Qs, the same chart on the SPY. And you could pretty much just get into an index at this point, ride it until it comes back down to the 200. When you look at the Dow is straightened out a little bit. Here's our sideways pattern. You can see the Dow took the lead, but has since then kind of come back and just kind of straightened out. We're still over the 200-day simple moving average, but it's kind of going sideways as compared to the NASDAQ in the SPY, the S&P. The S&P now in the NASDAQ have taken off a little bit. The Dow's kind of in a lagging area right here. You can see it flattening out a little on the RSI, on the MACD. So, we're in kind of an interesting time where we're trading now with the 3 indices above the 200-day simple moving average. So this is Lockheed Martin. We try to go and find positions and stocks that have price action pullback, like we see right here inside this green box right here. We had a lot of pullback. You can see trading under the 9. We came down, we bounced right off the 200-day simple moving average for several days and came back up and got one candle over the 9 full candle. And then at this point, we bought in. You can see about 455.35. That day it went up. You can see we've done some more upward patterns here. And the 9-day simple moving average is coming up. You see on yesterday, we had a kind of a big drawdown day. We tailed down. At this point, we put in a stop limit on the top side here, and it hit and got out at that point. So we made about 0.92%, but on a stock like this, paper trading 100 share, that's about $420 in 7 days on Lockheed Martin. And so now we could still potentially be in this trade. You can see we haven't closed the one candlestick under, but since we got in early, we had some room that I didn't want to lose the profits that we had. So we'll continue to watch this. If we see more strength, you can see down here that the RSI is now below the 50 level. We can see right here the slow scholastic also triggered a trade warning that when it crossed negatively. And then you can see we're kind of rolling over in the MACD. So we'll watch this one. It still has some room to go to the upside, and we'll see what happens. This is Adobe. It's pretty interesting. And I got a lot of lines on here. But you can see Adobe was just following along the 9-day simple moving average. This is the 200. We try not to trade under the 200. But at this point, you can see it crossed over, one full candle over. The next day, we bought in right at this level. And then we had a nice rise. We were above the 9. We're above the 200. We came all the way up to the top, you can see. This was yesterday. We had a nice gap. I thought it would gap down. Now we're up pretty good. So what you can do is split your position. So we sold 50 shares at this line right here. We're still in the position, but with that 50 shares we sold, we were up about 5.71%, or about $1,100 on a 100 share trade, and we're still in this position because we're still above the 9. We're still above the 200-day simple moving average, and our resistance line is clear up here at 438.40. So we will continue to watch this 9-day. And if we get down here and we get under this 9, we'll probably get out. We'll still have a gain on this one because here's our cost basis right here. So Adobe's been a pretty good trade. But we did want to take some profits. I don't like losing money. I'd rather take profits and have this still go up as opposed to having it go down and lose money. So we're not in the business of losing money. So this is an interesting one. This is Sprouts Farmers Market, just from the agricultural point of view. And you can see, again, we had one candle close above the 9. We're above the 200. This one continued to run. We didn't find this one until later. We got in right about at this point. Okay, 31.75. Kind of popped up and down, and yesterday it popped up, left a gap. We hit the 50-day simple moving average, which acted as a resistance line. And then today you can see we've crossed above the 50-day simple moving average, and we're going to see if we close above that. But at this point now, we have the 9 days simple moving average has crossed above our cost basis. And so this will act as support on the bottom. So if you want to maintain your profit, you can see the profit between here and the 9, or you could get out now if you wanted to. Just depends on your risk tolerance. You could get out half a position, or you can continue to ride up to the resistance line if you think it's going to go up that far. We go down, we look at the slow stochastic has crossed over positively. The RSI is still above 50 at 56.98, and we still have a positive trending up MACD. So you put your stop limits in if you want and see how far you can ride this up. Okay, here's one that didn't quite work out the way we wanted, but it did work out in getting us out of the trade before you get too deep into it. So you can see Ed, which is Consolidated Edison, was moving up. It got above the 200 or the 200-day and the 9-day moving average here. We were watching it, kept hitting off the 50-day moving average, acting as resistance. We got in right about here at this point. Yesterday it popped down. You can see it's like a spinning top type pattern, and today the bottom just fell out. But because we see the 200-day simple moving average here, we put a stop limit in right at this point. When it just blew through there, we didn't even know it. It just triggered our stop and went on down. You can see where we are today. We're down another $2.65 on this one. We got out on this line. We were down probably 1.3%, maybe $160 on this one, but it's better than going all the way down. So the system works. It gets you out, prevents you having big losses, and it keeps you in when the market's going up. So this is what we try to do over at the Platinum channel. We'll have wins, we'll have losses. We want the wins to be bigger than the losses, and that's how we make money. Okay, on the Platinum channel, we do paper trades only, but we track what we do, and you can see we have wins in green, losses in red. We try to limit the losses. You can see 0.86, 1.4, 1.9, 2.7. Here's our trade on Consolidated Ed, 1.36. We try to make the wins bigger, 5.71, 2.01, 188, 198, 6. To Lockheed Martin, you can see we made 0.92%. It hit a stop, 20-day SMA, and filled the stop. We made $420. This should be green right here, not red. Again, Adobe, we split the position, sold half the position today at 383.92. We bought at 363.19, 5.71%. Scholastic went negative in a crossover. We wanted to defend our gains and preserve some of our wealth. We came up with about 1,036 in gains on this one. We still have 2 positions open, half a position of Adobe, and then Sprouts Market. You see $18.58 a share on Adobe, $1.06 right now on Sprouts. So we have about $1,965 of profits out there we haven't closed on. And so far from the beginning of the year, with our paper trading, we're up about $4,600. If we add this in, be about $4,900 in about 4 weeks. So that's how we do it over here on the Platinum channel. We try to make it as transparent as possible. It's all paper trading, so you can learn how to do this on your own. We have a watch list that comes out. It's on the Platinum channel. We don't put everything on there, but we put potential swing trades on there so you can make up your own mind whether or not you want to get into swing trading, or you don't have to. This is all about being patient. It's about learning the process. You don't have to be in the market all the time. Let the market work for you.
So thank you very much for sharing these trades, Mark. I always think that it's much more important to know when to sell than when to buy into a stock, although buying into an appropriate entry point is important as well. And again, as always, I again learned so much from this discussion and hope our subscribers got something out of this episode and enjoyed it. So for more details and updates regarding swing trades and chart analysis every day, make sure you join our Platinum group and let's successfully invest and make through this tough market together. See you all next week. Thank you.